And let's talk a little bit more about this proposal and its chances to get through, right? We will have that majority in the Senate, so that does give it a little bit better prospects. But, there are a lot of measures in here that are not necessarily the favorites of Republicans, that minimum wage boost among them. So, as always, when we get these big packages, sort of ambitious plans in Washington, the debate that goes right along with it is whether it has a chance. Although, Myles, as we've been talking about, the popular part of the plan is giving people money.
I mean, Marco Rubio's objection is not really to giving people direct payments. It's about other things that are within the plan. Marco Rubio, therefore, saying, I also, too, want to give people money. Now, the market action today, certainly we're seeing some reaction in the stock market to what's happening in the bond market. Bond market clearly suggesting that some version of this is going to get through, perhaps leading to higher growth, dare we say, inflation. But I do think, just to come back to the direct payments part, because there's some interesting stuff in here. The child care tax credit, that's up to $3,600 per kid under 6, $3,000 for kids under 17. That's a huge deal. 1-year extension of the earned income tax credit, which kind of centrist Democrats tend to like as a general idea. That's all fine and well, but that stuff is really a technicality. What happened in the wake of the pandemic is we saw the government send checks, $1,200 checks to Americans. People loved getting that $1,200 check in the mail. They've now gotten a $600 check. Joe Biden would like to send an additional $1,400 check, and so too would many Republicans in the House and the Senate, as we just outlined with Marco Rubio's comments there. And so I think it's just very interesting to see. We're going to talk about Andrew Yang later in the program. His whole platform was giving everybody $1,000 a month. And it's just interesting to see it happen. And it shouldn't be that surprising that people love getting, direct payments from the government, but it's going to be really hard to put this cat back in the bag. I think the rest of our lives are going to be spent seeing the government figuring out not if, but how much money they should give to people, whether we're in a downturn or whether we're in kind of a more placid time, because this is clearly people in America don't make enough money. And if we say, we'll send you a check rather than we'll raise your pay, somehow that is more satisfying to lawmakers, both Democrats and Republicans.
Well, I might be opening myself up here to for Julie to really let me have it here, but I think anyone find it funny that after President-elect Joe Biden announcing a new $1.9 trillion stimulus plan, even if it gets cut down to, let's say, $1 trillion, as I'm seeing some estimates floating out there on the street this morning, that stock futures are now down close to 200 points. And I have this note in my box from Bleakley Advisory Chief Investment Officer Peter Bookvar, has been around the street for a long time. First sentence, what we heard last night was borrow, spend, and fair share, with the latter otherwise known as higher taxes. And you may not like to hear this, but this is some of the very early chatter in the early going here, that this plan, this big giant number, might lead to a pull forward in some of the tax increases that then candidate Joe Biden put forward. This is how Wall Street's starting to connect some of the dots. And of course, it's great. You have to get the spending out there, but this is how Wall Street may start to crunch these numbers. Higher taxes, perhaps you don't get that much of a boost to GDP because of a plan like this.
Okay, so I'm going to take this a couple parts at a time then, Brian Sozzi. First of all, I don't dispute certainly that people are talking about higher taxes, but are they talking about them more this morning than they were yesterday or the day before that or the day before that? We knew that this plan was coming. So definitely this is a concern of Wall Street. Is it a concern of Wall Street that's causing futures to go down today? That's the part that I would quibble with. I think we've seen the run up in stocks in advance of this plan, and it's not unusual to have quote unquote sell the news. There's also the notion that the plan might not get through, of course, as it stands, or that it might take more time. Now, on the tax front, of course, yes, people on Wall Street always worry about higher taxes, but as we have seen, I mean, listen, Peter Bookvar is a market veteran. I respect him. We've all been around the block a little bit too, and we know that higher taxes does not always mean lower equities. In fact, it frequently does not. So this is something that a lot of people on Wall Street like to bang the drum on and raise concerns about. We'll see if it materializes as something that really actually hurts markets and corporate profits at the end of the day. Myles?
And just quickly on that point about taxes, I think there's two parts here to take. One is the fear that, let's say, Americans $10 million and up in net income might face higher taxes. I think that's that seems to be inevitable over the next decade, that the wealthiest Americans are going to have some kind of personal tax bill. On the corporate side, though, I think that, to your point, Julie, about higher taxes not necessarily being negative for equities, if higher taxes are associated with a regime of direct payments to Americans who can then go spend that money, which feeds through revenue to these businesses, which then offsets some of that higher tax burden, I think investors can do those numbers in their spreadsheet and end up being fine with it. Now, again, those same investors might be the wealthier people who are paying higher personal tax bills. Certainly no one likes that. We've seen a whole generation of leaders who've built their entire lives, John Malone, Warren Buffett, around how can I not pay taxes? And that's all fine and well. They teach school, this whole curriculum about this in the MBA program. But I do think that on the corporate side specifically, if you are seeing a regime of direct payments, that can offset some of the burden that could be faced, and it wasn't explicitly outlined last night, but could be faced by businesses in the future.